What is up, man? It's good to have you back.
Thanks, Felix. Thanks for having me.
I've got Ryón in the house. He is the founding partner of Horizons Law, the former general counsel of both Solana and MyCrypto. And just at the side, also happens to be running his own fund, Marin Digital Ventures, where they're a really value-add investor for establishing DAOs, helping with the legal side, liquidity, and all kinds of stuff. We'll talk more about later. And really a forerunner in terms of how to structure DAOs, and he's even doing that himself with Paragon DAO, where he's one of the co-founders. So there's lots and lots to talk about. And the angle I want to talk for today's conversation really is the legal side of things, right? Because you do this for a living. You've been, one of the earliest, legal counsels in the crypto space because it's a young space still. And, I oftentimes approach these conversations from a philosophical perspective. What do I get asked every single day by investors what will happen if government's regulated? What do you think about this and that? And I have my opinions, but they're not legal opinions, right? And my education, it's more so coming at it from a game theoretical perspective. So today we're going to dive into all things from DeFi, DAOs, NFTs, metaverse, and so forth, and just get your take because this space is evolving so fast. So to break the ice, what's keeping you up at night in the crypto legal space?
I think it's a lot of things. I think we spend a lot of time on the firm side speaking with projects about proper ways of fundraising, using a token offering, using domestic entities, offshore entities. I think we spend a ton of time mostly educating projects to the best way to fundraise and meet their needs. I think what's keeping me up is we really, really need some regulatory clarity, I think, on the U.S. side from a lot of fronts. In addition to everything else you said, and on top of working with a lot of, I think really, we've been grateful and lucky to work with a lot of tier one projects. I was also a part of a founding member of POSA, Proof of Stake Alliance, which was this lobbying group. I don't know if you saw on crypto Twitter, there was this Jared decision about how to treat stakeable assets. Yeah, that was something that when I was with POSA started, and we were running with how to get proper tax treatment for stakeable assets, as well as legal or regulatory clarity. With my time there, I can say that I contributed to that piece, to the Jared decision, but we're obviously still waiting for some straight answers when it comes to some of these things. So we're very busy. We've been lucky to work with so many, again, great projects and, put out a lot of just guidance, advice, and really, I think where my firm is going now on the next level is trying some new or novel structuring around DAOs, working with projects and really trying to tweak them, iterate on them as far as, parts where they could be more decentralized or help them. A lot of founders, if you're a DeFi founder, sure, you understand what a DAO is, you understand what governance is, but I think one thing founders should think about, or just people in the space, is, if you're a DeFi founder, or any blockchain founder, you probably just want to do your project.
Sure.
Right? And governance is important and you understand what it is. But I think new founders to the space, they do need a little bit of education on how to go about that. You want to do a DAO first, capital, raise, formation. How do you do that?
Right.
What's the right way to do that?
Let's
answer.
Talk about capital raising. So since you said the thing that's keeping people up, and especially you, is capital raising, which, funny enough, that's been the topic even years ago. Back in 2017, it was 16, it was the ICO.
Right.
Then at some point we had the IDO, the initial DEX offering. Then I think the IEO, the initial exchange offering, where Binance listed some stuff. I think even Matic was one of them back then. Then you had STOs, which never really took off, security tokens.
Right, correct.
And now you're saying there's DAO first. So between all those different names that happened in as little as 4 years, how do you pick the right one? And how do you know that because there's no regulatory clarity or it's only slowly establishing, what you think is the right path today will be still right 2 years from now when they might actually do enforcement?
Sure. Yeah. Well, look, DAO first is interesting because I think strictly speaking, DAO first means there's no entity, right? There's, Kane calls them meat agreements, So there's no SAF, there's no safe and token warrant, there's no offering docs.
And for the listeners, Kane is the founder of Synthetics, which you also work with.
Yeah, another client. Yeah. So domestic counsel for SNX, been great working with them. So like a true DAO first offering means, you send some money to a smart contract, or you agree to send money to a committee that's formed for the purpose of kind of spinning up this project. Agreed upon tokenomics. With DAO first, it helps if you can build your community out of some existing community. So, for example, to use SNX, Thales worked with Thales. They did a DAO first approach. Pseudo-anonymous team or fully anonymous team. There's a lot of just things I think that traditional VCs would have a lot of trouble with right?
Because
no
it
contract.
starts with something as simple as like if there's no entity, then there's also not going to be a bank account, right? Because any bank account requires you to have, and that means whoever your VC is not going to be able to wire. They'll have to do an on-chain transaction.
Correct. Yeah.
And then as a founder, again, it's easy to skip over in year one when you're not successful, but the day comes you're a multi-billion-dollar chain, and you probably never pay tax because technically you're not located anywhere. So how do you view, I guess, jurisdiction with a DAO? Is there none?
So I think if it's DAO first, I think you have a real issue, right? I know in the U.S. we take the position that a DAO would be classified as a partnership. I, in particular, think that if that were ever litigated in the courts and actually analyzed by a federal judge, it would lead to precedent that would like really break the laws, right? Because just imagine if you're this unaffiliated partnership with 3,000, even if like, let's just say you're a DeFi protocol that has just a little bit of users. You have like 3,000 token holders changing all the time through centralized exchanges, through DEXs. Okay, how are you going to bring enforcement against all of them? Are you going to bring it against some and not others? Like, how are you going to like figure out who those people are? Like, it's just
right. There's no KYC trail.
Yeah, it's not practical. And I think a lot of what my practice, on the legal side, what it revolves around is really like, what does this really like look like, right? If you do a DAO first offering, do I think that and by the way, just as like a disclaimer, this isn't like legal advice, I'm no
legal advice,
no one's lawyer that's listening to this, and don't rely on
no financial advice either.
No financial advice, no legal advice, let's just talk.
Two dudes chopping it up.
Yeah, just two guys hanging out. But yeah, so like, look, I think with DAO first, there's some real kind of jurisdictional issues. You can look to the core team. If the core team is pseudo-anon, then what do you do? If the core team is really made up of a community, let's say they're built out of SNX or they're built out of Rari, right? Maybe the core team members don't know each other. So there's a lot of things that just, in my opinion, you have to look at fundraising in crypto. There's traditional ways, and we could talk about that. And then there's a lot of these, new ways. DAO first, right? Also, here's an issue with DAO first is counterparty. So there's no agreement, there's no entity. Who signs, right? Who would sign like acceptance of like investment from an investor?
Yeah, I mean, it even goes to things such as simple as like centralized exchanges. If your token wants to get listed on any centralized exchange, who is the representative that signs it, that has actual, like from a legal perspective, the ability to be a representative?
Right.
I guess that could be, but couldn't that be predetermined in the original founding documents where you say, hey, these are the initial 13 board members. So maybe take it practical out of the Paragon example that you co-founded.
Sure. So
how do you guys have like a starting council, or what's that look like?
Yeah, so we had a group of early founders, all pseudo-anonymous, but I think well-known names in the space. At least a lot of them have very strong crypto Twitter followings. Most of them, again, are pseudo-anonymous. I think I'm the only one that's doxed. We reached out to our network, conducted a private raise. After we did this private raise and documented everything, then we did a copper auction, where all like retail purchasers, like they had their own shot at getting in near like the raise price.
Yeah.
So we tried to do it fairly and give everybody a chance. We also set up some just interesting mechanics to see, who was really committed to and motivated by like engaging with this project. But as far as like the raise, a lot of it, you just have to trust that this project's gonna like launch and you're gonna get a token, because I mean, what's your recourse? You have no contractual recourse.
Sure, but from a governance perspective, how did you guys structure it where, going back to the initial question, like who makes those decisions? Who's the representative? Who, like even upgrades the code initially and whatnot? Is it a multi-sig or?
Yeah, so it's a multi-sig, like smart contract, like upgrade authority. I think
given to
the community, or to like, you can have a subcommittee, you can have like a dev committee, you can set what requires like a governance vote. And look, I think in practice, pure decentralized governance, every decision would go out to the community, but that, again, that's not like practical.
No, it's not.
Right?
No, it's but then the question is, like, most DAOs aren't really decentralized because they're still like core decision makers, and then they can kind of have a target on their back. So how do you remove that target?
Control person liability, right? Like if you're pointing, if you're the one that's in control of this project, even if it's decentralized, to your point, it's not really decentralized. So I think what projects would want to do, if you are doing your best to become more decentralized gradually, would be invite the community in, start to give over tasks, at a reasonable pace when safe to, right? You don't want to just launch a protocol and just go, okay, it's decentralized, here you go, and good luck.
Have fun.
And then it turns into some really crazy, potentially illegal or fraudulent or bad thing, right? And, I think what's great about crypto is everything is so transparent. People are so vocal. We all are on crypto Twitter all the time, even if we don't want to, so if any sort of bad actors, I think, are called out when it's obvious, like quickly, right? Sometimes, I mean, as we've seen with all like the Ohm fork stuff, like things can get crazy. So, what you can do is turn over pieces of that protocol when it is safe to, and when you have, I think, members that have shown that they're committed to this community and they have the skills. So again, just to use kind of like some sort of development subcommittee, that helps, right? To like have collective decision making versus just this group.
Right.
I mean, that is what cut against like Howey and some sort of securities classification, where an active participant or a group have less and less control over this protocol.
Right.
Well, then I think it stands to reason that you can make arguments that it's not this ongoing active participant who is running this this protocol. It's not a company, right? It's not a corporation for these reasons, right? And look, I think it's still got a long way to go. I think we will see eventually what the courts think about this, but I think there's I'm bullish. I'm bullish on the space.
I was gonna say, like, my overall read has been that regulators, as long as you're not a bad actor and you come at it with like the right intentions and whatnot, they are fairly cooperative, right? I mean, like what I've been seeing is, this has been a big trend as to you were saying that most, like, over time you're giving up power to make it more decentralized. This, in the last 24 months alone, we've seen Ryón from Maker step down and Maker Foundation, I think, split off. I know Synthetics itself also became more of a DAO, right? And I think Kane also stepped down. And then you've had most recently Andre from Wi-Fi step down. And so like there's this CRX Maki from Zushi step down. So across the entire DeFi landscape, it seems like half the founders at least started stepping down. And like some people could say, oh, they made their money, they quit. But I think there's a certain like legal undertone as well. Because if you want your baby to survive, then sometimes it takes that own personal sacrifice, so to say, hey, it needs to learn how to run on its own because I myself am a liability.
Sure. Yeah. No, I completely agree. I also think what's interesting in crypto, if in non-crypto, if you are a founder of like a SaaS company, right? Like what's your exit? What's your, ultimate exit from this company? You probably have to work at this with this project for at least 5 to 10 years, maybe 7. Then it gets acquired or you IPO, which would be great, I think, for any founder. With crypto, I mean, you can spin up some sort of DeFi primitive and be done with it in a year or two, and then move on to the next thing.
Yeah.
Right. So I think crypto founders, they have the benefit of, hey, we have to get decentralized. Yeah, it's probably smart and recommended to turn over control for parts and ultimately the entirety of your protocol. We look to things the SEC have said, Hester Pierce has said. I think that 3-year mark to be sufficiently decentralized. Hopefully that will go through.
That's the safe harbor rule, right?
Correct. Yeah. So over 3 years, you can slowly decentralize for a lot of the same reason I just gave. You don't want to launch something and just go, okay, community, good luck. I don't think that would turn out well, and I think the U.S. government doesn't think so. As they agree. I agree with them. So.
And how much time have you found that founders spend thinking about compliance in other countries? Because it's funny, we live in the U.S. and this comes from I'm an immigrant, right? And so when I lived in Germany, Germans love to think a lot about the U.S., right? Even on the nightly news, it's America. When you're in America, the U.S. is the only thing we think about, right? So how much time do founders and teams actually worry about compliance in other countries? If I'm a DeFi protocol, let's say in the lending space, yes, I might be breaking 10, 12 different, FINRA, SEC rules or whatever, but I might also break laws in 20, 50 different other countries. And then that's unmanageable to even because, with in the world of VPNs, how do you think about that?
Sure. Yeah. I mean, I think it's tough. I think some founders can almost be paralyzed, right? Because they have a good idea. They want to execute. They don't want to get in trouble. Their intention is not to do anything to hurt anybody and actually to provide real value, right? However, to your point, they're a lending protocol. How do they handle that? I think this is also where decentralization does play a very large part, because, again, if you have a robust community, everybody's doing their own things, launching their own initiatives, and you can sit back and validly make an argument that, hey, our DAO, we're doing our best to be transparent. Users have all the information that they need to make smart decisions as far as using the token, buying the token, buying it off whatever, a DEX or a centralized exchange, but the usage of it, the risks and the rewards of this protocol. I think we really, really emphasize transparency. I think that if you look at the SEC and the purpose behind a lot of these laws, they just want people to be able to make educated decisions. And I think educated means more than just, a dashboard, right? I think you have to also instruct people, for example, with OHM, what is rebasing? What is this whole bonding mechanism? I think most people, early, new entrants into the space, that should be who projects should think about, educating them, right? Someone that sees, oh, Shibu's going crazy, I'm going to go into crypto now,
right?
And they stumble upon your protocol. Allow them enough educational and informational resources, I think means a lot. You do that, you're decentralizing it. You have very little control of a protocol at a certain point. I think that's where the immense value of some of these projects can come, because look, if you're a lending protocol that's transparent, you instruct users to do their own research. Everything is kind of as buttoned up as possible in this decentralized world, in this example. I think some founders just may have to take some risks and realize that the point of a lot of these laws are, again, to protect people, to make sure they're not getting scammed. So, I mean, it's a whole new paradigm, to be honest, right? A lot of our laws don't contemplate, this technology. They don't, they weren't built for, international communities that are engaging with some protocol that nobody really has complete control over, right? At a certain point.
And I think it was your intern associate Mike who even pointed out that the Howey test is from an era of orange fields, right? Orange orchards. That's what's regulating the security space, And the irony is too, I recently started watching this new show called Super Pumped about the founder of Uber, and even in their history, right, Uber was breaking all the rules across the world with every country, their own taxi industry rules. Airbnb had all their hotel, industry rules, right? And
Right.
ultimately they still benefited people a lot, right? They gave a lot of people the opportunity to, make money off the properties they own, or make money around the clock when they have time, and riders have better prices, better service.
Sure.
So I think a lot of times most innovation is found kind of in the gray zones, and that's where I guess founders have to put the best foot forward, like be willing to, rattle a cage a little bit, but do so in a way that doesn't kill the animal inside.
Yep.
You know?
Yeah, totally. No, absolutely. And I think what I always recommend is, again, to your point, the gray area is where there's a ton of alpha and where you can change the world. And, like there's room for innovation. Founders should, do their research, whatever they're thinking of developing, again, do the best they can to be transparent, to put their decision-making process in a forum. You can start in your Discord, right? Like, I think a lot of projects think they can't have a decentralized community without a token. Well, strictly speaking, you can have a very robust Discord, and you can give over, parts of your protocol to sub DAOs in your Discord prior to having a token. Is that the best? No, I don't think so, but it's a start, that's like that's easy alpha. First thing that founders can do is start this decision-making process before they even have a token. Again, do their own research on whatever they're trying to build.
Yeah.
Understand the risks. Speak to competent counsel, because there is a ton of lawyers at big firms we all know and have heard in Silicon Valley, that we routinely get projects that bleed off from them because their crypto group doesn't get it, or even the crypto group that gets it doesn't understand the speed that's required to do deals and work with projects in the space. It's just, again, it's a new paradigm, and some of these boomer lawyers, they're just, they want to get in, they're just out of their league, I think.
Right, because you got to have 100%. I mean, and I'll say the same thing. I can say the same thing about funds. I'm sure there will be many traditional finance guys that say, "Let me start a Bitcoin fund," and I'm like, "Go enjoy that volatility." You grew up in a different environment than me, right? So yes, you might have 20 years on me, but I grew up in an environment where I've seen 60% drops in a single day. I've seen 10% drops in the split of a second, right?
Right.
So it does take, I think, native understanding, whether that's in the legal side, the accounting side, the finance side, and so forth. Now, I'm curious, since jurisdictional compliance, jurisdictional even regulation doesn't really make much sense in the digital world, are you seeing any kind of initiatives happening right now for almost like a global standard? I guess some of it would maybe even starts grassroots, that we as a community come together and say, hey, these are rules we want to play by. I guess the overarching question is, how do you make this less of a Wild West without 150 countries making their own rules?
Sure. Yeah. Well, look, I mean, I think we all know about Biden's executive order. What do I think was valuable in that? I appreciated that Biden put something out that said, look, we all need to all agencies should work together to figure out who's in charge of what, and how can we come up with some sort of unified framework, at least domestically. I think how some lawmaking works, again, I mean, I think there's lots of examples of this. I don't know if this will happen as it pertains to crypto, but I think it will, because of what you just mentioned. I think there needs to be an international coordinated effort. Do I think that is going to happen? Maybe not now, but I do think, the U.S., they come together, hopefully put out something that has some regulatory clarity. They will absolutely look to other jurisdictions, and the ones that have already issued regs and they've been clear. For example, I'm not a Gibraltar lawyer. I don't know anything about, but I know in Gibraltar there's 4 kind of designations of an asset being a security, and if it's not in those 4, then it's not a security. Now, I don't think you should do a token offering in Gibraltar. I mean, maybe you should. Maybe I'm not saying any of that, but just for example, right? So the U.S. could look at them. The U.S. could look at crypto-friendly jurisdictions. What does that mean? They can look at Switzerland. Maybe they'll look to the Caymans and see how Caymans. How they dealt with VASP, which is virtual asset service provider. that's kind of a different regime. But, long story short, I think the U.S. will look to some of these other jurisdictions. And if they come out with something that's usable, being the U.S., I think a lot of jurisdictions will borrow from us. So I also think it's an excellent opportunity, like if the U.S. government wanted to step up and, come and do something like quickly, right?
Yeah.
Because, as we all know, crypto, like stuff that was cool like last year is like, okay.
It's like boomer now.
Yeah.
Like it's crazy how fast DeFi fell out of favor from like the hottest thing in the world to now if you're crypto investing, investing in DeFi, it's like, oh, you're still investing in DeFi?
Yeah. Yeah, and it's like NFT-fi and
GameFi and Pri-Fi and everything. Yeah. But I'm curious. So because this kind of digital regulation even goes beyond crypto. Like one good example is GDPR, right? Europe had their own GDPR regulations, and now if you have a newsletter, well, you better get different kinds of approvals than you have to get in the US. And as this now applies to the metaverse, we're going to this world that's going to be more and more digitally native, right? Like I always ask the question, how much time do you spend online? And most people, let's say millennials and below, say 12 hours a day. Well, if you sleep 8 hours, that means you spend more time online than offline, right?
Right.
So, and if we now add this layer of the metaverse where everything is like 3D, virtual avatars, and so forth, there's going to be metaverse crime, right? Sure. Which probably nobody's thinking about. I'm sure you've probably maybe thought about here and there. How do you approach that?
I think if we fast forward to where we're plugged into the metaverse, most of our waking lives, and this is where we kind of live, right? I think there would likely be some sort of regime, right? Like
Facebook court?
Yeah, Facebook court or, Metaplex or whatever.
Yeah.
Law enforcement or rule enforcement, or whatever they want to call it. But there'll likely be some enforcement body that maybe was put there by a DAO. And I don't know, they cut you off from visiting your favorite, locale, or I don't know, they take your house from you because it's not really your actual brick and mortar house. It's your metaverse house. But, and then there'll just be all this interesting litigation on, what is critical, like, what would really be, like property rights. There's just so much that will be iterated on and added to and expanded, from our traditional laws. And I think it'll be very interesting.
It's funny. It just made me think back to an older project that we looked deeply into like a couple of years ago, Aragon. Sure. I don't know if you're, Aragon even had Aragon courts already years ago, where you could be a digital juror. Even if you never took legal, training or anything, I could become an Aragon juror and make decisions over other people's DAO suits between each other.
Sure, right.
So it's almost becoming like where the metaverse is becoming nation states with their own rule set, and the metaverse is backed by what, a DAO. So the DAO is becoming a nation state in itself, has its own governance rights, its own courts and stuff.
Sovereign, yeah.
Self-sovereign. That's very beautiful and utopian, and I really hope it works out like that. But the funny thing is, if it's done right, there's very little that can stop it from becoming that.
And to your point, Felix, like if there's very little stopping it, and just if we are playing this thought experiment, and it's the metaverse, say 30 years from now, and you could be what you can't be in the U.S., or if you're in Singapore or in Japan or wherever in Europe, and then what happens when meet governments, whatever, let's call them, like real governments, what will they do when people care more about the rules in this like international metaverse versus, the U.S. government or, the government of Italy or whatever it is, wherever you're located. I think that's when things will get really interesting and like pretty crazy.
And it's funny because I had this conversation with a German politician once. And we were talking about Facebook's Libra, because back then, so most people don't even know the name Libra anymore because now it's called Novi or something else. Back in 2019, Facebook wanted to start their own stablecoin. It was called Libra.
Right. It
was supposed to be like a basket of multiple different like international currencies, and most governments were against it. And I talked with him about it. He's like, oh yeah, it's not that big of a deal. Like if Germany doesn't allow it, it's just not going to happen. Blah, blah, blah. I'm like, let's be honest here for a second. I think Facebook has more power than Germany. And I'm saying this as a German, right? So I might ruffle some feathers, but the ultimate truth is that there are a number of U.S. companies, whether it's an Apple, a Facebook, have higher market caps than many countries have in GDP.
Sure. Yeah.
They have bigger user bases. Like Facebook has more users than China has in citizens.
Right.
Right?
Right.
So when you think about that and you say, hey, some of these tech companies, if they're now becoming digital, have their own digital worlds like Meta, right? Then what are most countries going to do about that, right? Like you neither have the economic power to really be bigger than Facebook, nor do you have the same reach, right? Like, I mean, if you try to make a hit campaign against Facebook, good luck, because Facebook commands the whole cultural space. I mean, they're gonna run negative content against the country, and all of a sudden you hate that country, right? So like if Germany wants to like push against Facebook, all Facebook has to do is like do anti-German content on everybody's feed. Right. All of a sudden we all hate Germany, right?
Right, totally.
Yeah, so it's wild. I guess that's now we're going very philosophical, so maybe we'll segue back to something more practical.
Sure.
NFTs. NFTs have been all the hype the last few months, the last year. We've seen all kinds of types, from access tokens to art to music NFTs to people wanting to tokenize real estate to make it NFT. Right. Maybe you can give us from a legal perspective, an overview of like what do you see as different types of NFTs, and if I were to launch one today, what should I be paying attention to?
Yeah, sure. Look, so I appreciate NFTs. I own a couple of really nice NFTs that I think are great as far as collector's items. I also have NFTs that allow me access to certain groups, and I can get cool merch drops. One of my other attorneys gave me one where it's gives me access to early drops of sneakers from this second market retailer. So I think NFTs are a great kind of gateway drug for new entrants in the space. I think just conceptually they can be grasped easily. They make sense. I think from a legal perspective, look, if you have a unique piece of art, it's really hard to say that that's a security, right? This NFT is different from this one. Obviously, they aren't securities. Now, you bake things into it that could resemble a security, sort of I forgot the number of the standard, but the royalty standard, right? Okay, now it's getting a little tricky. Then you can also break or fractionalize an NFT, right? And then I think at that point, it's pretty hard to argue that it's not a security, right? It doesn't have some strong features of a security when you're literally breaking
just
something
because of
into
fractionalization, because I know Masterworks did the same thing for traditional art.
Sure. I don't know what Masterworks did. Did they do they fractionalized each little piece of it?
No, Masterworks does let's say I want to buy a fraction of a Banksy painting, right? So
do they sell that one part of it? They go, you buy the bottom right of the Banksy painting?
No, I think it's probably just a share in the Banksy. So, but I guess the share is probably security. Yeah,
probably security.
Yeah.
One thing I've seen is, it's cute. It's not legit fractionalization, but I have a painting and I chop this thing into 1,000 squares, and this square is different than this square. Then that's how you can fractionalize it, but it's not.
It's still art. It's still all unique.
And each one is unique. Yeah.
Yep.
But if you take this, again, much like shares in a company, this painting, and you go, we're just going to, each one of these represents the entire painting and all the rights that are associated with it. I mean, it's hard. It's hard to argue, right?
Yeah, and then there's more and more happening too now with airdrops, where one NFT gives you another NFT, or an NFT gives you maybe future token.
Right. So yeah, that's great that you raised that. I think something we've seen a couple of times is sort of this, NFT airdrop when it's really kind of disguised as a token offering.
Gotcha.
Right. So I have all of these NFTs, and there's 100 per tier, and the price is different, right? But if I buy the one and I buy a tier 1 NFT, I get 1 million tokens, and if I buy a tier 4 NFT, I get 20,000 tokens. I mean, it's just an NFT drop disguised as a token offering. That's not recommended, to be clear. Yeah. Projects should not do that. You want to do a token offering, domestically, you should rely on Reg D, Reg S. If you're doing something offshore, you can use a BVI Cayman structure. We've seen some of this Panama structuring, which I don't know if that's the best route because they're not in FATF. They don't have, they're not looking at any sort of they have not a lot of oversight. And I think once they join, they'll have to adopt some sort of regime. And so anyway, we can go into that, later if you want to know about offshore structuring. But yeah, I have a lot of thoughts.
I think it's relevant, especially for both founders and investors, because let's say pre-crypto era, when somebody sees, oh, this thing is based in Panama or Cayman, like you immediately, a lot of people, like retail minds jump to something illegal is happening here, right? Or like you're trying to launder money, or you're trying to like hide for taxes, but it's actually pretty standard. I mean, even like in the fund world, if you want to optimize, you have either Cayman or BVI feeder fund, for example. So maybe this kind of fits into like one of the questions I was going to ask anyway, which is red flags. Like if I'm an investor, whether I want to invest in tokens, NFTs, are there any common things that you look for where you say, hey, if a team is doing X, there's probably, maybe not all the time, but probably bad intent behind there, or just something to pay attention to?
Yeah, sure. So I think where I'm at right now in the space, having been working as an attorney, now, on the investment side, just really providing as much value as I can in space on all these fronts for a very long time. I think we are now like a cut above in the type of intros and projects we work with. Like we don't work with any sort of, like we work with like deep crypto, like the most complicated, the most scary, like difficult to execute projects. Like that's what's fun, right? I don't have to just take anybody anymore now. So I say all that because I have such a strong referral network, and I work with a lot of just really great people in the space that are connected to founders and funds. I mean, still work with a ton of Solana DeFi projects, work with a lot of Tendermint projects, still tons of ETH projects. But so, I say all that because most of the projects we get, especially if they come through the, a legal avenue, we make sure they're set up correctly. Now, if you're an investor, so just remove that, and like, what would I look for as red flags if I was an investor, in any project would be, look at the founders, look at the tokenomics, how long are the founders locked up for, right? If the founders unlock before the investors, major red flag, right? Because they can rug you, if they're locked up as long as the investors, like medium red, slightly yellow flag, if you are really this committed to this project, why do you need your tokens unlocked right around the same time as investors, right? I think there's definitely some drama in crypto with some teams and teams that like started this project and left and went to this other project. I think, most investors, if they do research, they can see through that. But I mean, look, I think you still should do your diligence, look at the team, look at, I think a lot of time in a bull market, and I'm sure you've seen this, the types of projects, it's an ohm fork, it's, convex on avalanche, right?
Yeah, when it gets lazy, when there's little innovation, but rather it's X on Y. Yeah. It's Uniswap, but on finance.
Smart chain, so I think those should also be just, and I don't know if you'd agree, but like I always think, okay, we're getting close to top of market when, my normie friends are like, oh, do you have any Shibu? Or like, oh, do I buy Solana right now? Like, to tell me what to do. And I'm like, okay, coming out of the woodwork. And then like projects that I'm seeing, it's just, they're not even trying. They have a deck, it's really has flavors of early ICOs all over again when the market's that frothy. It's like a deck, the team can talk the game, right? But like, what have they built? I mean, you can look at their GitHub. Are they committing code? Are they actually?
Are they even devs? I mean, I've seen it so many times with metaverse projects that they say like, oh, we come up with the lore, and we'll just hire everything else. Right. And the crazy thing is, if they can raise the money, they can get away with that, at least temporarily. Because if you've raised 40 million on a deck, sure, now you got enough money to pay some devs to go build you something. But that ends up being what we've been seeing a lot, both with DeFi and the metaverse, where you have these big unreleased projects, games that are trading at $1 billion market cap with no live game yet.
It's wild. It's wild. Yeah. I mean, we were looking at some GameFi project today, and I was talking to my analyst after the call, and he was like, "Wow, like they're releasing some mini game. Their TGEs. I don't know. It's like 6 months out or something, but they already have a game, and it's like, okay, cool. Like they actually have something that we can see in play to kind of like test how good they are. And they had like 3 devs, and it's like, oh wow, great, But I think the reality is, you look at it and you're like, oh, they have, what's the minimum necessary to do this project, right? But when the market's frothy, to your point, it's like, okay, well, it's great, and look at these. The art looks awesome, and they're gamers, right? That's like something I asked. He's like, I can tell they're gamers, and I was like, but I appreciate they have this actual project that we can, or a mini game we can look at, right? And try. Because I saw this thing. I don't know if it was on Decrypt or something, where the journalist tried Axie, and he was just like, I wasted like $300 in gas fees, and I don't even know what I did. So, obviously a lot of these projects are still very nascent in their infancy, but I think in time, I don't know, how crazy would it be if like your son or daughter, like they get up and they played some play to earn game from their guild, and they had to grind all weekend, like slaying goblins, and because they need to make money, so they could take the girl they want to prom, and they don't want to ask dad or something. You know what I mean? Like that's.
Damn, you're getting a lot of nerds too excited out there, right?
Yeah.
They're like, I can slay goblins and get the girl. There's hope, boys. There's hope.
Yeah, it's just in the metaverse, but she's super hot, right?
That's right. Just make sure she's not a dude in real life. But anything is possible in the metaverse. So be who you want to be. That's the beauty of it. Right. I was gonna say, because you had the ability, the luxury, and like just opportunity to work with a lot of like actual incredible founders. So maybe that's a way to reverse engineer the question too. Is there certain things you've noticed among some of these guys that really hit it out the park that they have in common? Because like you actually work with them, right? So like if I talk to them, it's like, yeah, maybe they're pitching to an investor, but with you, like you see them into their day-to-day operations, how they think, what they worry about, how they plan the future.
Sure. Yeah. I mean, look, at a high level, I think an unhealthy obsession, sadly, but necessary. I think you can relate. I can definitely relate. Obvious deep expertise in whatever they're building. So like we work with PsyOptions. They're great, super smart guys. They get the tech stack, they get the financial piece. They're very serious like builders. And they also have like this strong finance background, right? Like I think having that expertise, obviously, really just being committed. And one of the things I think some founders lose sight of is, hey, like it's great you're on crypto Twitter. It's great that like Brian Armstrong follows you, but like seriously, like if I can say it, like fuck that shit, like get off. Like crypto Twitter is great. Like keep your head down, build, go play the game, get capital raise, and then really just focus on putting something together and putting it out. I think some founders they get a little big headed, right? They're like, oh, I raised $10 million on a 60, 7 months ago, when everything was frothy, and I'm the man or I'm the woman, right? When the reality is, you raise the money, now you have to show and prove, and then we see founders get into fights, parts of the core team leaving, lawsuits, all just messy stuff, which unfortunately is part of, the firm side is definitely part of the job. And I think is always necessary for my team to go through these disputes. Like you really can learn what happens when a transaction goes wrong. We will get referrals of founders that have problems. We deal with a couple every year, like big ones. So it's great for my young attorneys to learn what happens, but I think it is common amongst founders. Like how can it not be, right? How can you be 20 years old, right, and like be the founder of some major protocol? I'm an autonomous lawyer for Rari. Worked with Rari for a long time. Jay,
love them, Jay.
Yeah, Jay. Shout out to Jay. I've known Jay since I think he was 16 when he had Ambo, and I put together the Ambo deal with my crypto. Yep. So found them, sourced it, put the deal together, did that like acqui-hire, and then when Jay left and Raw, we stayed, in contact. Like, I mean, he's a super great guy, a super smart kid. He's like I think he's left to do some other kind of endeavor, right? Yeah. Pentagon, but like he's it's like $1 billion protocol.
Yeah. I mean, he's definitely got that like psychotic obsession, and I mean that in the most positive way I could.
Yeah, totally. So I mean, like, what do you do? I mean, like when I was, how old was he? 21, 20? I mean, when I was 21, I was an idiot. Yeah. And this guy's like a founder of $1 billion protocol. I mean, up there with real serious, CEOs of big like public companies.
Right. And I think that's something that this is actually kind of unique to the space. I mean, yes, during the .com bubble, right? Like there was a lot of like young people too that made a lot of money, but unlike equity markets where you have a long time till you're liquid, crypto, a lot of these guys are liquid from day one. Yeah. And it always happens, like, yes, we have, when you zoom out, we've got these long cycles of bear markets where things are slow, things aren't going well, but then in a span of 12 months to 24 months, lives can change with like 1, 2, 3, 4, 5 zeros being added to net worth. And there's a lot of, and this is a weird thing that you can't talk about with many people because, and when I say whether that's myself or even like founders and stuff like that, because like, how do you deal with these changes without, like you said, a lot of times founders letting it get to their head, making them maybe even have a quarter life crisis where they're questioning, I hit all the goals that I wanted to hit in like 3 months. What now? Maybe was their heart really in it for the tech or was it for something else? Right. Have you found that? Have you been able to see people? I guess the question is, do people change, or have you seen like major 180 shifts like that in founders, or is it more so that you could already see the signs beforehand and now they're just becoming more who they are? Because there's this saying, money makes you just more who you are.
Yeah, I was going to say that. I was going to say I think money does it gives you that security to let down that mask that you wear to make sure you aren't a menace to society, or you do have friends, or like you can get the things that you need to get to survive, physically, emotional, mentally, right? I mean, it was something that I thought about. I've seen with a lot of my friends, especially friends that have gone through 2 cycles. They go through
the magic.
They go through the first one and they're like, wow, I'm in my mid-20s or early 20s and I don't have to work anymore. Yeah. What am I going to do? All right, I'm an investor. Well, are you really an investor? Like, are you trying to go pro? I think that's something that I also see a lot in crypto, where there's these people that, they got into Solana early or something, or whatever, Near or Luna, whatever. We all know those big wins, and now like they really don't need to work. They're like, I'm going to redeploy capital in the space, and I think we see, a lot of people that really are kind of just borrowing phrasing and trying to like deploy or trying to be an investor when they're just kind of spinning their wheels. I think if, in my opinion, and this is something that I am actively doing, at least on the investment side, I've worked with some great projects. I'm redeploying capital into those ecosystems. So to your point, we work with a lot of like Solana projects, like we work with Orca, like provide liquidity if we can, right? If they, if there's SOL on hand, I'm happy to contribute that, right? Like I think that's what some of these people who have gotten in early and now they're doing like, well, okay, cool. Well, how did you do well? Why? See if you can build on that. Like, can you start some sort of philanthropic DAO or something, right? Like help advocate. Like, I mean, there's really so much that we can do in this space and that's available. It's not like, sure, it's saturated with certain projects, but really this thing that we're in just is going to keep expanding and iterating, and really the things you can do in crypto. I mean, it's amazing, right? Yeah. We're, paragons, and it's something that like, I think we'll see in the future, but one thing that's been discussed is, Paragon spun up as this complement to like Parallel Life, right? Which has a lot of hype behind it, and we're still looking at that. But then there's this other, I think, lesser known piece where we're trying to kind of solve this DAO first problem and, coming up with some novel kind of procedure to implement these, these new projects that want to be DAO first. And to your earlier point, like they don't want to deal with who's the committee, who's the community, like, early founders don't want to like take that risk. Well, what if another DAO proposed it and it was adopted by this protocol?
Okay.
Things like that are what get me up in the morning. So maybe actually let me amend my answer. I think that's what keeps me up at night is now that I've been lucky enough to work with great projects and participate with some of these projects. What can I do to change the space? And I think it's given me a great opportunity. Like doing well with some of these projects have allowed me to really push forward on things that I think most lawyers like wouldn't do. Like I have a group in my firm where we actively get together and come up with new structures, DAO structures, right? Like new voting structures. Like we're working with a project where, you have, so you have all your tokenomics, you launch, you give your tokens to investors, you do some for the community, you do liquidity providers, whatever, right? You have all these out, but then you'll have a vast chunk of the protocol tokens that are like locked up and held by a Cayman Foundation. Or if you're DAO first, it's in some multi-sig, which has a lot of community members that manage it now. Well, if these tokens are just sitting there, why can't you come up with some structure where those tokens can be used to vote and maybe further decentralize the protocol? So for example, you said lending protocol, right? So let's say you have a lending protocol. So what are two parties in a lending protocol?
The borrowers and the lenders.
Correct, right? So why couldn't you have, a committee on the lending side and a committee on the borrowing side, naturally adverse, right? So they're going to make the best decisions for their side. Why couldn't, to encourage engagement with the protocol, why couldn't these locked tokens be given temporarily to maybe these voting blocks like BLOCs,
right, which might be the top users in each category, like the biggest borrowers, the biggest lenders.
Correct. Gamify it. Yeah. Incentivize engagement with the protocol. And those tokens, sure, they don't get them, but maybe they get a little extra incentive because they got into the borrower's voting block, right? We call it a reverse proxy, right? Because instead of like you giving your vote to somebody, like there's votes there and you just take them. But just to vote, you don't get the tokens. Why can't we try that? Like why couldn't that be something? Well, it is, right? We work with the project and they're going to implement that.
Governance itself is something I think needs a lot more rethinking because a lot of it has become like super late because of the financialization of it. It's become lazy where people delegate their tokens to a validator because they want the staking returns. They don't care about what the validator votes for.
Right.
So all of a sudden, by gaming it the right way, a validator can get a lot of voting power just because maybe they give a bigger share of the staking profits over.
Right.
And I've seen so many DAOs being structured differently from some have elected councils, some have, one token, one vote, but that leads to plutocracy. Have you found that there is there one model that works best for most, or how would you even recommend a starting team to decide on like how are we going to structure this and like kind of balance the decentralization but also not lose speed? Because I think so many times the more decentralized you go, the slower it gets. Even some multi-sigs that I sit on, it takes days to pass a vote.
Oh, totally. Yeah, and it's like you get pinged on Discord, Signal, Telegram, and you vote. And it's just like, okay, great, deploy to, a Uniswap, like LP.
Gas fees every time. Yeah.
Gas fees every time. Never compensated, right? Like, yeah. It's, to be on a DAO and be part of a multi-sig, is a thankless job, right? Like, so.
At first I was like, sign me up. It looks good on the bio. But then I'm like, that's another channel to check.
Nothing there. Maybe like they needed it and you said you would be available and you fell asleep or something. Now there's a problem. It's only stress that comes with that.
You don't really want to keep the multi-sig token in a hot wallet, but at the same time, if every single time to like dig up through security features to like access it, it's
getting your ledger or doing the crab thing. Totally. So look, I think so. To answer your question, for projects, it really depends, right? Are you a DAO first play? How important is the community? right? Sure, communities maybe 50% of the pie, right, of your tokenomics pie. It could be more, right? Maybe it's full community. I think the project, it's hard to give kind of a one size fits all. And I think that that's also kind of just a systemic problem with what's going on right now and why a lot of lawyers struggle, because we are very tailored, right? We get a project, we go, okay, what are you doing? What's the intent, right? Is it really you want to just be the best kind of decentralized options play? Or are you really just trying to spin up like this infrastructure that you have options, but like it's really people can build on it and make other things and make new sort of like primitives, right? It starts with their intent and what they're trying to do. Then I think from there, everything will flow. Yeah.
Gotcha. Yeah. Because I mean, I've seen so many structures from it's a safe with a token warrant to a SAFT right, some sort of convertible node, and then kind of say a token comes later. Would you ultimately say that like once you introduce a token, you should get rid of the private entity, or is there a play like even the Axie I think still has the game development company?
Right. So yeah, I think a common structure to your point would be this offshore structure, right, where some of the treasury assets are maybe like held, which is really just papered, right, because the community will hold it likely through a multi-sig, but it's not always that way. And you'll have this sort of operating company, development company domestically that provides services like software, consulting services, development services to the protocol in exchange for tokens, some of the raise capital, other sort of fees. I think that's a common structure. We've also, to your point, seen safe and token warrants where maybe a project raises through a domestic C Corp, right? And it's equity with a token, kicker because either, they think it's faster, and there's a whole thing with safe and token warrants I can talk about, would be long. Maybe they did it, they thought it would be better again, and they do the raise through their domestic C Corp, and then maybe they move the tokens offshore to a foundation, right? To kind of, there's a lot of points for using a foundation. I think like something that projects maybe don't know when we educate them is if some of these foundations, like you give them funds, they're ownerless, right? And so you really can't claw back. So it also goes towards decentralization. Right? If I have millions of dollars that I've raised and I say, okay, I'm going to provide services to this protocol and I'm going to do a service agreement with the entity, right? Yeah. But I'm holding the funds, and it's like, DAO, can we provide services? And they're like, yeah, sure. You're the core team. Great. And then when you come up for another term, you're like, can we, still do it? And they're like, yeah, maybe, but it doesn't matter. Yeah. It's all theater because you have custody of the funds. Now it's different if you give it to this Cayman Foundation, you provide services, your term is up, right? You're on a reasonable term, not a 10-year term, right, not a 1-year term, right? Then you go up for an additional term. Well, if you're not doing it, if you're not building properly, if you are abusing funds, if you're messing something up, well, now the DAO can take that from you, right? And founders should invite other participants into that, right? So they provide development services to the protocol. Other teams and builders can throw their hat in the mix, and we would recommend that.
Right.
Invite other participants in to provide those services. And that way you can always say, look, we've been the best. We're the core team and we did the first, build on this. As we've iterated, we've always showed up, done a great job, and we can lose that job, right? That's being decentralized. Correct. That's like cutting against the securities classification because you aren't an active participant. You can lose. Like, I mean, in what other kind of structure can a CEO lose his job in 1 year, right? None.
Right.
Well, you play that game, and then that's also how you argue that there is utility to your token, on top of whatever consumptive purposes for that protocol, but from a governance perspective, right? That's real.
And I think it's also a great way to balance the decentralization part with the speed, because if you have the private development company, for example, you can still be the CEO, you can still make all the shots without having, like, once you secure the contract, right? Let's say you secure the contract, we're going to develop the front end. Like one practical example I'm thinking of is, I'm on the Enzyme Council, and Mona has Avant-Garde Finance. So Avant-Garde Finance is the private development company. that applies for a contract every year from Enzyme.
Correct. Right.
And I have the same voting rights as she does, right? So she can't just single-handedly give herself that money. No, the other 13 council members have to agree. And that way, let's say one day, she's doing an amazing job. But let's say one day, Avantgarde is not doing a good job anymore. Well, we could decide to give it someone else.
Right. And to your earlier point, what does that do? That keeps founders that may be raised at this crazy valuation. They are a founder of a $1 billion protocol. Well, guess what? If you are truly decentralized, you can lose your job. If there's other people that can do it, that's like real decentralization where, it is easier for the other projects to throw their hat in. And I think we'll see that. Right now, I think that there's a little bit of theater where if the core team does a good job, they're pretty stuck. And even if they mess things up, they can still stick around, right? I think in the future it'll be a lot easier for other projects to like throw their hat in. We're working with projects that have some sort of like DAO worker, like rep system, or how that would work across like DAOs and cross chain. I mean, there's all these things that are being spun up. I think we'll see some real interesting changes in the next couple of years, probably in the next 18 months, to be honest.
Yeah. I mean, we saw a lot already happen in the last 4 years where, people still made like domestic companies back then, and then we rotated foundations, and now even the foundations are getting rid of. So,
right. So to answer your question, I think being purely decentralized, you should have no central point, right? And I think that extends to your entities. So you would dissolve your entities, but look, that can also like extend to what? Your interface, your UX.
Sure.
So if you're using an interface, like you should probably work on decentralizing your interface. You should give control of that at some point, maybe to the community. You should invite others to build on your protocol for a different interface, right?
So but if you fully decentralize, how can they even enter a legally binding contract with, let's say, me, the VC?
Right. Correct. So to circle back to this DAO first, I think what we see in practice is people buying in to the DAO first approach.
Oh, so I get the tokens right away.
You get the tokens, and hopefully you can get them and you can use them to vote immediately in the protocol. Maybe they don't distribute them immediately. In the deals that we've done, it's kind of a dirty secret, right? And
tell them all.
I will not could say names, but like I've seen some of these deals where, funds that have said they were comfortable doing DAO first, or was like, yeah, it's fine. As we got into the nitty gritty of the deal, they're like, yeah, DAO first for you, Felix, or for me, Ryón, but like, the fund, just give us a SAF and everybody else can be DAO first, So yeah, it is interesting because, the idea and the philosophy is great, and I think is the future. But yeah, I think there's still issues that need to be ironed out. Like, how do you have your lead not asking for a SAF, right? It takes some courage to do that. How do you do that when you have LPs and they have a fiduciary duty? Right. Okay, are you, Felix, going to do a DAO first and then they rug you? What are you going to say? Hey guys, like, hey, I'm deep crypto. Like I told you, we do DAO first, deals. They're going to say, cool.
And I have no contract to even show you or anything.
Yeah. Just send it to the smart contract. Here's the Ether scan,
and it's gone.
Yeah, that's it, right? Yeah. I got rugged for $1 million. Like, good luck.
Yeah.
So I think there are some things that are being, developed in the space, some tooling. I think we'll see, some more interesting kind of escrow like primitives that maybe would spin up where you can hold the funds, and maybe this is some like decentralized intermediary, right? I think we'll see those, but it's a real problem if you don't have this centralized entity, at least from a legal structural standpoint, because what are you going to sign, right? How are you going to get listed on an exchange if you have some sort of exchange listing agreement? Well, who's signing for that, right? No individual is going to sign for it. I think something that we saw with some of these projects, when they get big enough and they're sexy enough, well, if you have something really, really legit, like Coinbase will eventually list you, even if you have no entity and you do nothing. They're just going to list you.
They want your volume.
Right, because they're going to get some fees from it. And I've seen that. I've seen that with the client, right, where they had no entity. And it's like, who are we going to sign this thing with? And it's like, DAO first. It's a DAO. Everybody. The core team. Like, are you nervous? No. Okay. Well, let's do the deal. But again, that's a very long-winded answer to, I think there's still issues with this kind of strategy. I'm bullish. I think it does allow projects to raise capital quickly. I think when investors start to see, these problems of, hey, we can't solve anything. How do we deal with our fiduciaries, with LPs? Even if like you, Felix, like I'm sure you would be interested in these things, but like, how can you make yourself like comfortable? How can you show your LPs, look, there's not a problem? Once those are solved, I think these no legal wrapper, fully decentralized communities, I think it'll be more real. But we're still a ways away from that.
And that's the tricky part, because like as much as I'm trying to feed the listeners like an easy like step one to do, let's say if I'm a founder and what's the first type of vehicle I use, the truth is like the best thing to do is probably consult with somebody, whether that's a law firm like yours. Same thing goes with me when I have these questions. So for example, I think it was the end of 2019, I was considering, hey, I want to start using DeFi with the fund, right? This was like early days where people like I had to talk to my auditors and my auditors and tax preparers. I was like, hey, if we were to use like decentralized pools tomorrow, if we were to use decentralized exchanges tomorrow, like, are you capable? Like, would you understand what the hell is going on? Like, how do I wanted to get their approval first, right? So, but like, had a couple calls with them, and they're comfortable with it, right? Same thing as like NFTs. Well, I'm like, do you guys know how to like value NFTs? Like, what do we go based off? Is it floor price? Is it most recent purchase price? Like, all those are like firsts. So whether that's in my case as an asset manager, like becoming comfortable with like doing something new, talk to the right people, like for example your auditors or your administrators and so forth. And in a founder's case, get a good lawyer, right? And like, because the thing is, whatever we discussed today is actually very likely to be outdated 2 years from now.
Definitely, yeah,
right?
Absolutely. I would fully agree with that. And I think what we see a lot of times with founders, new founders to the space, look, you're a sharp girl, you're a sharp, kid. You'll do research, you'll look on Google, you'll talk to other founders, and they'll say, hey, do a safe and token warrant. You're like, okay, I'm going to go on Clerky, spin up a C Corp, do a safe and token warrant because it's cheap, it's cheap and easy. But then like you forget that this is basically a securities offering, right? Mm-hmm. But then your token is unlocked after a month because you just didn't talk to a lawyer and understand that if you're doing some sort of offering in the US, like follow Reg D, right? Yep. Do it privately, 506B. If you're doing publicly, well, you need to get some, outside third party. Do like maybe CoinList, right? But if you do it on your own, you'll miss some of these little pieces that will be critical and can mess up your protocol and just basically mess up your own like personal situation. I mean, one issue I see all the time, and it's like a major thing that I call out, after intro close with projects is founder token tax strategies, right? What do you do? 83Bs? Well, 83Bs contemplate property, right? Like,
dumb it down for me. What's 83Bs?
So 83Bs is an election you make when you have an entity and you say basically the founder's shares, right? The fair market value of the founder's shares is at the time of grant, not the time of vest.
Gotcha.
Right?
Yeah.
Because at the time of event, you have nothing. Of grant, there's nothing. And
right, you buy them for like a cent.
Right, 1/1000th of a cent. Now, equity is... it's there, or like, it's intangible, but the entity has been formed. It's basically a thing, right? So you can give that property. Now, what do you do with tokens? So Genesis block hasn't been laid. You're raising for your tokens. There's no property. So it's different than equity in that respect, right? So maybe you do your 83Bs and you just take that position, right? Also, I'm not a tax lawyer and I'm not qualified to give tax advice. Yeah. But what do you do? There's a lot of different things you can do. And, again, you need to talk to a lawyer that's been in the space for a while. And I mean, let me tell you, like, a lawyer been in the space for a while is rare that like has lived in it on a deep, deep level. Big firms, like big partners, I've seen them make massive mistakes. People that are like, oh, I've got 20 years securities experience on you. I'm like, that's cool. I've 6 years deep crypto experience. You don't even know what's going on right now, So yeah, do talk to a competent lawyer. Talk to a couple competent lawyers, right? Get some different opinions, and then do your research on top of that, because there's some real things that you can mess up that can prevent you from even getting off the ground.
Yeah, I mean, even when things like, let's say you are an employee at a token company, right, and you get paid in tokens, and maybe those tokens come with lockup, but if they still get dropped to your wallet, you run the risk that you have to pay capital gains on they're pretty much dividend payments, right? Even if you just structure the smart contract incorrectly, you know, and then all of a sudden, like, well, you can't dump the tokens either because of a lockup or because like you don't want to be seen as a team member dumping, but you still have to pay taxes on it, right?
Yeah.
So, but like if you structure differently,
your custody,
have it be held somewhere in a smart contract that's not in your custody yet, and you have to like do a claim function, right?
Right. Redeem,
there's these small details where like if you do them wrong, they could cost you, 30-40% of everything you're getting.
Totally. And it's a shame, right? And this was something that with POSA, at least, from the tax and like legal perspective for stakeable assets, like getting some sort of feedback and just getting that on this mini piece on this massive pie that is crypto was hard and painstaking and costly. And even in that decision, if we like boil down to it, it's given like a lean, but there's really no like super strong precedent that's come out of that. But it's like, this is how, the commissioner leaned on this decision, but they didn't give a reasoned decision, right? So
Gotcha.
It's tough. It's really tough. So to your point, look, talk to a competent lawyer and talk to a competent like tax professional, a couple of them,
Amazing. And I think you can find the competent lawyers by looking at who represents some of these best crypto projects.
Right.
Talk to some other crypto founders, like who do they use, because that way you're getting somebody from the inside versus the many lawyers that run traditional firms and now just say we do crypto too. But
Right.
there's a difference between we do crypto and we've been doing crypto for years.
Right. Totally.
So I'm sure we'll have you back because there's so much we can talk about here. But to wrap it up, because we've gotten a lot of advice for founders, I want to give a little bit of piece of advice for the upcoming crypto lawyers out there, right? The young Mike Kairos out there that are going through the
Wow. He owes you for that.
He does. All the aspiring lawyers that are currently going to law school or maybe finishing up college, but looking to go to law school in a second, how do they break into crypto? What's the most valuable thing you look for when you get an applicant in? Because I've been hiring myself, and so many times I look at applicants, I'm like, I wish I could have told you 3 years ago what to do, so that way now you're ready for me. So,
yeah, sure. So, so the question is, you are a young lawyer just out of law school, or you're like a 3L. What do you do, right? I think what you do is, again, unfortunately, I think it takes a healthy obsession in this space to get it. Right? Because not only do you need to learn kind of the legal landscape or lack thereof, then what are the best practices? How do you know? You're a 3L or a young lawyer. And look, just because a project said it worked on crypto Twitter, that doesn't mean anything. You know what I mean? Like, really got to look into it. So what do? I think you should like get involved. You can get involved with the DAO. There's a lot of these. There's this whole like DAO, like gig economy, and that's going to be more and more of a thing. I saw this like, you can on Fiverr you can get like Discord, kind of.
Oh really?
Like, yeah, just people, trolls, or managers if you want to call them, and they'll like handle all your Discord stuff for your project or across projects, right? So look, I think you get involved if you're not a lawyer. Be sure if you are doing any sort of like, oh, this is what I think from a legal perspective because I'm a 3L. You need to tell everybody you're not a lawyer. Don't rely on the advice. Don't mess up your career because like you just are so excited to get involved, right? So get involved, but do just be honest about who you are and your experience or lack thereof. Projects would love for young lawyers or law students to get involved and to do some of the research. And I think, look, you can get in Discord, you can get on a forum and be like, this is how I look at this. I'm not a lawyer, but like, I've seen other projects do this similar thing. Like, you could help figure things out. Again, if you aren't a lawyer, I would encourage all these projects to eventually speak to, competent counsel. You don't want to be responsible for advising some project as a law student and they end up doing something, heaven forbid, like fraudulent, or they do a fraudulent offering even, or,
right. Because that burns you for the rest of, right.
Yeah. And it's like, well, they're going to tell everybody, you messed up. You haven't even graduated law school, for other like new young lawyers, I still think the advice would be the same. The one thing I think is very important is, with law firms, there's still this kind of like, it's the the branding and the size of the law firm. So it's like, oh, you know, Perkins, Fenwick, like Wilson, like we routinely like get real projects that just can't deal with them. One, because they're overpriced or like non-responsive, or they kind of get it, but they messed like one or two things up. Like, you know, there are good lawyers everywhere. There are good lawyers in every sort of law firm, big and small. But I would say this kind of like blind reliance on, you know, a big Silicon Valley firm. Like, I can't tell you the stories and the things we've had to clean up, like bad things, like sad, like from, you know, the group that, you know, while the firm is well known and maybe the group is starting to be well known in crypto, you know, they're overworked, or like they put their associates on some of this just like basic stuff that like an experienced lawyer would be like, no, you know. So for these young lawyers, sure, if you can get to a big firm, that's great, but like you can like come and train hard and think about these ideas and these concepts, and you can engage with some other lawyers, maybe on Twitter, maybe not. I would maybe DM and ask like, hey, can I just get on a call and like pick your brain? What did I do? Right? My background, I did some, you know, complex federal litigation, and then I didn't like it. I spoke to one of my friends who was actually Adam Draper of Boost VC, and I was like, yeah, and I was like, I want to, you know, can I talk to your lawyer? And I spoke to him, and you know, eventually worked my way into doing stuff with his name is Jared, with Boost VC and Tim's lawyer. That's how I got exposed to like early crypto stuff, and I was like, this is the future, you know. And I just threw myself in. After I left, you know, working with my old boss. Well, long story short, I went to.
When did you start Horizons?
6 years ago.
6 years ago.
2016.
2016. Okay.
5 years ago. 6 years ago.
And crypto from the start?
Well, I mean, look, when I first started, I was, you know, I had worked with Boost law firm. I left to go in-house at this non-crypto startup. It was like a travel startup. And that's like, if you ever want to just hear like startup horror stories, like I have a whole thing I could talk about with that, or, you know, would be a great story. Long story short, it didn't work. It blew up like a lot of startups do. I was gone too long to go back to my job. I didn't want to go to another bigger firm where I just kind of got sweatshopped out. Maybe that's my aversion to a big firm, because when I was at one, they didn't treat me properly and I didn't learn much. You know, couldn't go back, didn't want to go to a big firm. Said, hey, I'll start my own, you know, firm. Talked to my old boss and said, you know, can I come in and maybe work with some of these portfolio projects? He said, sure. If Adam says okay, you know, called Adam a bunch, got a hold of him. You know, he said, okay, Jared, like signed off on you. Started working at Boost. And one of my first projects I started working with was my Ether wallet, like right when they were going through that hard fork. So yeah, worked with Tay, got her out of that. Polychain led the Series A. That was kind of the start of the journey. And I think it's like really great that you asked that, because it was kind of like full circle where really one of my first clients working with Taylor, right, my crypto just got acquired by Consensus. But, you know, amazing. So
yeah, no, I remember those days because I was living in LA at the time, where I think she was based in LA, right? Yeah, we had my Ether wallet, my crypto split. Yeah, it's crazy how much time flies in the crypto space, because, you know, we have all these different eras that like newcomers will no longer be even familiar with. But like, I think it's a very narrative rich world that we live in, because so much happens so fast.
So fast, man. So fast. So
with that, I'm sure we're going to have you back, because like there's so much to talk about. And I also think that, you know, because the legal landscape, the regulatory landscape evolves so much, I'm sure at least once a year, I'm sure we can, you know, kind of like catch up and see how things are developing according to you. Until then, I think any young aspiring crypto lawyers that just finishing law school, hit up Horizons Law. I mean, you want to work with the best, he's right there.
So. Yeah, please do. We scaled up decently well, but yeah, I'd be happy if anybody reached out, and can also put you in touch with people from the team, and always happy to speak to young lawyers trying to get into the space.
Awesome.
I think I have to.
What's the best way to keep in touch with you, to find you?
You can hit me up on Twitter. It's my name. It's Ryón Nixon. You also can contact me through my contact on the website, or maybe reach out to some of my team, to your boy Michael.
Cairo.
Yeah, he's very active on crypto Twitter. I'm doing deals. So,
awesome. He's busy, heads down, as all the founders should. Well, man, thanks so much for being on, and we're glad we had this friendship, and let's keep building.
Let's keep building. Thank you, Felix.